Welcome, and I was sitting here thinking about today's meeting and talking about ethics, and I'm looking at this group out here and thinking, I'm preaching to the choir, folks, right? I mean, this is the group that, if there's a group that's protecting the public interest, that understands ethics and the importance of ethics, you're it. At the same time, you're a group that when you go back to your states, you wind up being a cheerleader. You wind up being a leader. You're going to be a thought leader talking to other people, not only about ethics, but about potential change in the profession. Kind of what's coming our way is some changes in terms of this new codification. We talked about it at the regional meetings. It's an exposure draft form. We've had comment letters back. The AICPA Professional Ethics Executive Committee is reviewing those comment letters, and my guess is you'll see a substantially revised codification out in probably next spring. Now that said, and as I'm sitting here thinking about this topic that we're working on today, as an educator, I have a question for each of you in terms of where did you really get your education? And with all due respect to Billy Atkinson, I'm willing to bet it wasn't at Texas A&M. From my experience, there was a lot of important things I learned in my career from key mentors, from people who saw potential threats to professional activity, and through their actions and the actions of the firm that I worked for, safeguards were put in place, and we learned and we grew from those experiences. And I think the threats and safeguards approach that you're going to see in the codification, it's already there in the independent standards of the AICPA, basically says when there's a gray area and there's no rule on point, today you'd say if there's a gray area and there's no rule on point outside of independence, I don't have to do anything. And kind of what's coming down the road is a conceptual framework. It's already there in the international standards. And what it says, if there's no rule on point, then what's the threat to ethical behavior? And what appropriate safeguards do you put in place? In the AICPA codification, what you're going to see is two conceptual frameworks, one for members in public practice and one for members in business. They're slightly different because of the context in which those CPAs work. Those two conceptual frameworks are very similar to the threats and safeguards approach that exists today in the international standards. It's very similar to the threats and safeguard approach that exists today in the AICPA independence rules. Because in April of 2007, the independence rules implemented a threats and safeguards approach, that if there's not a specific rule on point to comply with the AICPA professional standards today, then you have to ask, what's the threat and what's the safeguard? And as I've gone around and I've talked to different people around the country and different CPAs around the country, I'm finding that even today there are some folks that are not that familiar with the fact that, well, we have this threats and safeguards approach, and it's here today, and it's here today in the independence rules. And the way the threats and safeguards approach would work, and with respect to the AICPA standards, if there's a rule on point, follow the rule. What do you do when there's not a rule on point? You have to think, are there threats and threats to independence that I should be concerned about? Or as we go forward, maybe we're probably looking at implementing these conceptual frameworks in December of 2015. So we've got some time to learn this, right? But right across the board, is there an ethical threat? If so, evaluate the significance of that threat. and then apply appropriate safeguards. When I look at the appropriate potential threats that we talk about, and if you look in your binders, there's some copies of my slides. Behind this slide, there's definitions of each of these threats, particularly the AICPA proposed threats. The advocacy threat, the adverse interest threat, familiarity threat, management participation, self-review, self-interest threats, or undue influence threats. And as we go through our little drama today, I'm going to ask you to try and pay attention and see which of these threats you identify, and do you think appropriate safeguards were or were not put in place? I would add to this that in the governmental arena, the GAO Yellow Book says you always use a threats and safeguards approach. So, with that in mind, we've developed 3 scenarios for you here, where we've got 3 vignettes that kind of represent situations that might play out in front of your state board, okay? And so, as we get ready to go through this, what I'm asking you to do as you listen, can you identify the threats that exist in each of these 3 stories? And what's your evaluation of the appropriate safeguards that may or may not have been put in place? Now, before we get there, I'm going to turn things to Noel for a moment and let Noel talk a little bit about his perspective as we go forward.
Thank you, Ray. My job here is in part to muddy the waters with a legal perspective on some good, clean accounting. But what I want to just, I guess, further to what Ray is saying is that what we're going to have here are some scenarios that are examples intended to illustrate some of the types of discussions that might be had at a board level or otherwise concerning threats and safeguards. The type of discussion that might take place in a professional standards committee, for example, or in a board as a whole when it's deliberating regarding a case, that type of situation, or a complaints committee perhaps as well. Of course, the procedures from state to state as well as the rules are going to vary a great deal, but the emphasis on these scenarios is more about the procedures involved in a discussion with the licensee, where the licensee is there and essentially somewhat testifying or being interviewed, as it were. And in part, it's focused on a discussion regarding compliance with ethical standards, particularly where a state's independence rules refer to or even adopt by reference the independent standards of the AICPA. This is particularly focused on a discussion of how the independence conceptual framework involving threats and safeguards how that might be applied or might fail to be applied in practice. And the following are a few scenarios of the threats and safeguards approach.
Thank you. As we move forward, we've got 3 little vignettes here for you. Jack Daly, Mark Harris are going to play board members. We've got Janice Gray, Michael Bryant, and Nicole Casson at different times are going to play licensees. Okay? And in our first scenario, and as we move forward, let me ask for the audience to make sure that you get the mic close enough that people are able to hear when you speak. But our first story involves a small town. We're going to call it Smallville. It's a tiny historic town in the middle of the United States. Its auditor is ABC Audit firm that'll be represented in this first case by Janice Gray. And they've been auditors for the last 5 years. Smallville's finance director is Clark Kent, and he's played a similar role previously in another city. Shelley Miller's the accounting clerk for Smallville. She's been there for about 15 years. The finance department provides a trial balance to the accounting firm, ABC, and it doesn't make, the city itself doesn't make any journal entries at the end of the year. The adjusting journal entries are proposed by the auditor. Smallville provides the auditor with fixed asset listing of additions and deletions, and the audit firm prepares depreciation schedule. However, at the end of the year, capital assets are really not that material to the company. The audit firm prepares the financial statements, including cash to accrual conversions, GASB 34 conversions. The audit firm prepares the property tax roll reconciliation for the Smallville. Clark Kent, the finance director, reviews and approves all adjusting journal entries, and as the town finance director, the city council assume management responsibilities related to non-audit services. So now let's look in on this board discussion.
Sorry about that. Good afternoon, Ms. Gray. We are looking back on your audit of Smallville for the year ended December 31st, 2012. We noted that you performed significant non-audit services for the client. Our state ethics rules require you and your firm to comply both with the CPA Ethics Interpretation 1013 and non-audit services, non-audit services, as well as the GAO Yellow Book application of a threats and safeguards approach. Can you explain how you complied with both of these requirements?
Well, let me begin by discussing our approach to the GAO Yellow Book requirements. Early in our engagement, we identified some fairly traditional threats to our independence that would often occur in an engagement of this size. As you noted, our firm provided a number of non-attest services to Smallville. From our perspective, these are fairly traditional issues that come up in a city the size of Smallville, and we believe that we were fully independent. We proposed all of the year-end adjusting entries, including the cash to accrual conversions and the GASB 34 conversion entries. This is something we routinely do for audit clients similar to Smallville. All of the adjusting journal entries are initiated by our audit staff, and they are subject to 2 levels of review within our firm. They are reviewed by both the engagement manager and the engagement partner. Finally, they are subject to a review by a concurring review partner who is knowledgeable in governmental accounting. We feel that this level of review adequately mitigates any self-review threat. In addition, there is a traditional management participation threat that we take very seriously. Mr. Kent has been Smallville's finance director for the last 5 years, and prior to accepting the job, he played a similar role for another city. He has a very good understanding of the purpose of our proposed adjustments, and we spend significant time with him ensuring that he understands how we develop the entries. We also go over the draft financial statements with Mr. Kent. And finally, it is Mr. Kent who presents the financial statements to the City Council. We are confident that Mr. Kent has the skills, knowledge, and experience to take responsibility for the adjustments and for the financial statements. This is also key to our compliance with AICPA Interpretation 1013. And we're confident that if you discuss this with Mr. Kent, and if you look at the minutes of the City Council, you'll find that Mr. Kent and the City Council can reasonably assume all responsibilities for both adjusting entries and the financial statements. Let me conclude with one final statement. Our firm understands the significance of AICPA Interpretation 1013, as well as the self-review threat and the management participation threat. And the adequacy of the safeguards that we applied should be viewed through the eyes of a reasonable and informed third party who is aware of the relevant information associated with our audit. We are confident that we meet both the AICPA independence interpretation and the GAO Yellow Book requirements for applying a threats and safeguards approach.
Actually, Ms. Gray, our state board's investigator has already discussed this matter with Mr. Kent. With Mr. Kent, and he confirms your understanding. From my perspective, I think your firm has taken an appropriate step to safeguard your firm's independence. Are there any other questions from other State Board members at this time?
First session, but let me turn it to Noel and ask for your observations here.
I'm looking at an audience that's wondering a little bit. I know that if you look back at your rules, your statute in your state, the word threat and the word safeguard probably are not in there in the rules. Now, how are you going to get there? How are you going to be able to threaten to discipline or even take someone's license away where you're talking about an entire bracket of professional conduct relating to independence that is not yet in there or successfully in the literature? There's another reality that you have to face, and that is that typically the boards are comprised not just of audit practitioners and educators, but also tax practitioners and public members. And how alien is this concept going to be to them? So there's going to be some work involved in getting familiar and getting a board prepared to be able to not only answer the questions, but ask the right questions involved in this. And yet this is, I think, where a lot of the direction in terms of enforcement will go when it comes to the issue of independence. Another question you'll have to answer out there, or at least think through as you go forward, and this will be one that you want to turn to your legal counsel for, is will there be adequate notice to the licensees that by failing to recognize the threats or failing to take appropriate safeguard measures that they may be in jeopardy of their license, the adequacy of the notice? Because again, that's a constitutional guarantee as well as something that's in the Administrative Procedures Act. So I'd set that as a framework in the background as part of how you must analyze going forward. It's going to be important and challenging that you get a fairly clear objective sense of this, even though it's intrinsically subjective.
As we drafted this first story, we wanted to start off with something that was pretty straightforward. So we dealt primarily with the issue of non-audit services. And in the area of non-audit services, I would hope that most of us are familiar with the issues that arise from either management participation threats or self-review threats. And I hope that you recognize that probably in this place we had probably a pretty clear response from the licensee in terms of not only how they met the GAO Yellow Book requirements in terms of threats and safeguards, but also how they've met Ethics Interpretation 101.3. As we move into the next scenario, I'm going to ask you to again try and think through as we go through this little story, what new threats appear, and are the safeguards appropriate to the situation? So in this next series, we're still talking about Smallville. We're a year later, and several things have happened a year later. We're now moved on to 2013. As part of the 2012 audit, the auditors discovered employee fraud at Smallville that had been perpetrated by Shelley Miller, the accounting clerk. Also in 2013, Smallville wound up putting their audit out for bid. It was a normal process. They did that every 5 years. And as a result, the city selects Fred Browning, a managing partner of a two-partner firm, Browning CPAs, as their new auditor. The city council had known Fred Browning because from 2009 to 2011, this CPA actually sat on their city council. Fred, during that time, raised concerns about internal controls at the city. Fred was quite pleased that he'd been selected as the auditor for Smallville, particularly because this represented real growth for his small firm. Actually, acquiring this audit represented a 40% growth in annual revenues for his firm. He's confident that his firm has the professional competence to perform the audit, so Browning & Browning has been contracted to perform the general audit services similar to what was done by ABC firm. So now let's look back in on this board discussion.
For joining us this afternoon. We are looking back on your audit of Smallville for the year ended December 31st, 2013. As you reflect on your work during that audit, do you believe that there were any significant threats to your firm's independence?
Threats to our firm's independence. I'm not sure what you mean. I was a member of the City Council from 2009 to 2011, but we were not the city's auditors during that time. We were engaged as auditors for the 2013 calendar year in May of 2013. But that was long after I went off the City Council. We did not have any loans to or from the city. Neither my partner nor I own any city bonds, so I'm not sure what your concern is.
Well, perhaps we can help. Let's begin with discussing the non-audit services that your firm performed as part of the engagement. If I understand correctly, your firm developed all of the adjusting journal entries at the end of the year. You developed the cash to accrual conversions and GASB 34 adjustments. Would you please review the process with the board that you used in performing these services?
Sure, I was very familiar with the process as I had previously reviewed these types of adjustments when I was on the City Council. So I developed both the cash to accrual conversions and the GASB 34 adjustments. Once I developed these adjustments, I presented them to Smallville's finance director, Mr. Clark Kent. Mr. Kent reviewed the adjustments and seemed comfortable with them. Subsequently, I went over a draft of the financial statements with Mr. Kent. Once again, he seemed comfortable with the financials. Both Mr. Kent and I presented the financial statements to the City Council. We discussed the adjusting journal entries, and the council accepted the financial statements. Does that help?
Mr. Browning, did you make any assessment of Mr. Kent's his skill, his knowledge, his experience in accepting the responsibility for the financial statements that you prepared?
I have known Clark Kent in different capacities for the last 5 years. He is bulletproof. I worked with him when I was on the council. I believe that he is quite competent, almost super competent. He can easily see through a problem. However, I'm not sure that I documented this conclusion in our working papers.
I have one more question, if I could, please. Can you discuss the review process within your firm for reviewing the adjustments that you proposed?
Cynthia Browning, my partner and daughter, would review the working papers and proposed adjustments. However, as we were wrapping up the audit for the year ended December 31st, 2013, she was on medical leave. It was about that time that she had her first child, our first grandchild. So I developed the adjusting journal entries myself, and they were reviewed by Mr. Kent, Smithville's finance director.
Mr. Browning, the theme behind these questions relates to your compliance with our state's ethics rules that require that you comply with both the CPA independence interpretation on non-attest services and with the GAO Yellow Book threats and safeguards approach to independence. The GAO Yellow Book would require that you evaluate both self-review threats to independence and management participation threats to independence. Do you understand these threats?
I recall the terms from my ethics CPE.
What particular safeguards did you put in place to guard against a self-review threat or a management participation threat? What safeguards?
As I reflect on this, I don't see myself as a part of management or as taking on management's responsibilities. I understand that my firm proposed significant adjustments to the books in order to prepare the financials. However, these were discussed in detail with the finance director, and he both understood the adjustments and, in my opinion, took responsibility for the financial statements. While our normal review process was not in place that year, I would submit that Clark Kent's review of all adjustments would safeguard against any self-review threat.
So in your opinion, Mr. Kent Was the safeguard against a self-review threat or a management participation threat to independence? Is that correct?
Yes, I think his questions and discussions with me regarding the journal entries that we proposed and the draft of the financial statements themselves were adequate safeguards.
I'm inclined to agree with you regarding the management participation threat and with respect to your compliance with 1013. However, I do have some lingering concerns about the self-review threat. I'm trying to look at this through the eyes of a reasonable and informed third party. The State Board still needs to talk with Clark Kent, which will take place later today. He is due to fly in for the board meeting this afternoon. Do other board members have any questions for Mr. Browning on any of these issues?
Yes, I do. Mr. Brown, I have one further issue that I'd like to discuss with you. We understand from our investigator that accepting this engagement resulted in a 40% increase in your firm's annual gross revenues. Do you see this as a threat to your firm's independence?
Once again, I'm not sure what the issue is here. Our firm is one of 4 that submitted bids in a competitive bidding process with the city to obtain the audit. Our fees were in line with those submitted by other CPA firms that submitted bids. Sure, our firm benefited by this growth. However, why would this be an independence issue?
I guess I'm concerned about a potential self-interest threat to independence. This is a threat that your firm is dependent on fees from Smallville. Let me ask the question another way. If you lost the audit of Smallville, how would it change your firm?
That's an interesting question. Smallville is an important client, and if we lost Smallville, we would have to be more aggressive in seeking out other clients. I think we'd be okay in the long run, but in the short term, it would put us in a real financial pinch.
In the audit, you raised a few questions about the various reserves that Clark Kent did not want to accept. You asked for larger reserves for potential uncollectible property taxes, as well as accruing additional costs associated with litigation against Shelley Miller. In aggregate, these 2 adjustments alone were very close to your planning materiality threshold. How did you determine that it was unnecessary to book those adjustments?
Initially, I did not feel strongly one way or the other about either of these adjustments. However, they were subjective, and I did want to put them on the table for discussion with Mr. Kent. I think that he had good reasons for keeping the provision for uncollectible property taxes where it was. The potential accrual of litigation costs was not material. The financial statements are the client's financial statements, and in the end, I thought they were presented fairly in all material respects.
I would ask you to think back on those discussions. Did you discuss your position with your partner and obtain her input? Also, you only had a year-to-year contract. Were you ever concerned about taking a hard line with Smallville and that may jeopardize your keeping the audit?
As I said earlier, Cynthia, my daughter and partner, was in the last stages of a pregnancy and on medical leave. I did not discuss any matters related to the 2013 audit with her. She needed to focus on her health. I would not have wanted to lose Smallville as an audit client, but then and now I believe the financial statements were presented fairly in all material respects.
I have a few further questions on this fee matter. Have you reviewed the AICPA Plain English Guide to Independence?
No, not lately.
The AICPA Plain English Guide to Independence provides guidance when a significant proportion of audit fees comes from a particular client. This guide suggests some procedures that might mitigate possible threats to independence and objectivity, such as some form of pre-issuance or post-issuance review. Did you consider subjecting this engagement to pre- or post-issuance review?
I explained earlier the procedures that we performed. My daughter and partner was on medical leave, and as a result, she did not review this engagement. As I said before, I believe the financial statements are presented fairly in all material respects.
Again, Mr. Browning, thank you for your time. Are there any other questions from other State Board members?
Adjourn at this point. The board would like to talk to Clark Kent, Smallville's financial director, and we'll return to this later this afternoon to make a final decision.
All right, thank you. So there's scenario number 2, similar to 1, right? We had same self-review threat. We had the same management participation threat, probably dealt with in different ways, particularly the self-review threat. When you have a small firm, and in this particular case, a small firm, you had one partner on medical leave, not really taking any particular steps to try and engage in some additional type of review. That additional type of review might be particularly important when you think about the self-interest threat and the question associated with audit fees. The AICPA has an audit guide, or not audit guide, but kind of that short, plain English guide to independence that really talks about this type of issue. And one of the key issues that you'd probably see for a small firm is probably having to reach out and obtain either some type of pre-issuance or post-issuance review, perhaps from outside the firm. Those would be standard safeguards that you might normally see in place, and you might expect to be in place, particularly when you have a partner that's on leave in this type of situation. We've got one last scenario for you here, and this scenario stays with the same situation, Smallville. Clark Kent, we moved on one more year now, and Clark Kent has retired as the finance director of Smallville. He's moved to some place called his Fortress of Solitude. Mr. Kent was replaced by Linda Carter. She's a former partner of a medium-sized accounting firm, and she's a friend and former mentor of Fred Browning. Ms. Carter has a strong personality. Her colleagues often call her Wonder Woman, which the city council expected to be helpful in cleaning up the accounting department after fraud had been found. Ms. Carter came in with 2 agenda items on her mind: implementing stronger internal controls and reducing the annual cost of the audit.
Move on to discuss your audit of Smallville for the year ended December 31st, 2014. During this year, Ms. Carter replaced Clark Kent as Smallville's finance director. Do you believe that you have still complied with AICPA Interpretation 1013? And also, further, were there any new threats to your firm's independence that you identified during 2014?
We have already discussed our audit for 2013. From my perspective, we were independent in 2013 and also in the subsequent year, 2014. My answer is the same as before.
As Yogi Berra once said, this is deja vu all over again. Let's return to some ground that we may have already covered. How familiar are you with the threats and safeguards approach to independence that has been part of the AICPA's professional standards and our Board of Accountancy rules since 2007?
As I said before, I recall this being discussed in a CPE class. However, the independence rules are the rules, and we believe that we followed all of the independence rules.
So, Mr. Browning, let's put the issue of non-audit services in the AICPA Interpretation 101 aside for just a moment. You may recall from your ethics CPE class that the purpose of the AICPA conceptual framework for independence is to cover situations that are not directly covered in a specific rule. As a result, if there is no rule that covers a specific situation, a CPA should consider whether that situation gives rise to any threats to independence. If threats arise, a CPA should evaluate whether sufficient safeguards can be put in place to reduce a threat to an acceptable level or entirely remove it. We have already had discussions of the potential management participation and self-review threats. However, I would like to move this discussion in a different direction. Based on our review of your working papers, you cut back on your audit time, as well as your audit fees. Can you explain the logic behind these reductions?
As we began the audit, we had an initial audit meeting with Smallville's finance director, new finance director, Linda Carter. I have known Ms. Carter for a long time, and I find her to be quite competent. During this meeting, she suggested some streamlining to our procedures. We considered her suggestions, followed them, and were able to do a competent job at a lower cost to the taxpayers.
When we look at your work papers, we don't see any significant changes in your assessment of risk. Is that correct?
I guess that is correct. I know Ms. Carter has it on her agenda to improve internal controls at the city. However, she was only finance director for about 7 months, and it takes a while to implement new controls. Certainly, Ms. Carter brought a strong level of oversight to the city, and the control environment was good.
So would you say that Ms. Carter provided more oversight than her predecessor, Mr. Clint?
I really respect Ms. Carter. In fact, I used to work for her and learned a great deal of my auditing from her. Nevertheless, after the prior auditor discovered the fraud at Smallville, I think Mr. Kent was more sensitive to the risk at the city. In my opinion, Ms. Carter is doing a very good job of oversight of the accounting arena, yet Mr. Kent did a good job last year as well. I'm not sure there's a material difference between the two finance directors.
We're describing Ms. Carter as Lindy, and I noticed a little gleam in your eye. Is there anything maybe about a non-professional relationship this board should be informed about or interested about between you and Ms. Carter?
Certainly not. And I think any inference to that are inappropriate, and I will take the Fifth Amendment on any such further questions.
Counsel, is the Fifth Amendment appropriate here?
It's not in the script.
Let me recap what I'm seeing. You really did not change your risk assessments from 2013 to 2014. One of the most significant costs to the city is its payroll cost. In fact, payroll costs are over 70% of the Smallville city's budget. Yet you cut your sample sizes for payroll testing almost in half. Was this one of Lindy's suggestions for how you would streamline the audit?
Yes, that was one of Ms. Carter's suggestions. We found no problems in the payroll audit in 2013, so her suggestions seemed like logical suggestions. I would further say that we found no problem in the payroll audit in 2014. We might have extended our testing if we had found some problems, but we didn't. I'm not sure that I understand your concerns.
Mr. Brown, here's my concern. One of the threats that you should have been concerned about was a familiarity threat. This is a threat that because of a close relationship with a test client, that a licensee will become too sympathetic to the client's interest or too accepting of the client's work product. Ms. Carter was a mentor to you. Further, at her suggestion, you reduced the scope of your audit work, particularly in payroll, even though there was a high volume of transactions and the control risk was high. Further, your risk assessments did not change. That is my concern. However, before I reach a conclusion, I have a question for your partner, Cynthia Browning. Ms. Browning, I understand that you did not review the working papers for the 2013 audit because you were on medical leave. However, you did review the working papers for the 2014 audit. Can you tell the board your view of the change in scope of work that took place during the 2014 audit?
Sure. I performed a normal concurring partner review. I probably paid the most attention to the adjusting journal entries that we proposed, the cash to accrual entries, GASB 34 adjustments. Looking back on this, I don't recall raising concerns about the scope of the audit. I was more focused on what we found from doing our audit procedures. However, I do have a great deal of confidence in Dad here to set the scope of the audit properly.
Ms. Browning, did you bring an increased degree of professional skepticism to the audit because of the familiarity and the respect that your father has for Ms. Carter?
I don't think I did anything different than I normally would. Professional skepticism is important. I believe I reviewed the outcome of the audit procedures thoroughly and with a careful eye, and I had no concerns about our audit findings.
Well, Fred and Cynthia, I have concern with respect to the 2014 audit of Smallville. I see no documentation of consideration of threats to independence or actions taken as a result. I believe there was a very real familiarity threat in 2014 because of the prior mentorship of Mr. Browning by Ms. Carter. Further, Ms. Carter suggested ways that you might streamline the audit, and you acted on those suggestions. You state the internal controls did not change. I'm not sure that the inherent risk changed in 2014 from 2013. You did not document such changes, yet on Ms. Carter's suggestions, you changed the scope of your audit work. We don't know if you will reach the same conclusion or not if you had done more audit work. Ms. Browning, I'm also concerned that there may be a familiarity threat, that you might have been too sympathetic to the scope of the decisions made by your father because he is your father. I'm happy to let other board members ask any questions they may have. However, I'm very concerned that Browning and Browning CPAs did not institute safeguards against a familiarity threat. I'm also concerned that there is evidence that Mr. Browning subordinated his judgment about the scope of the 2014 audit to Linda Carter, and then Ms. Browning subordinated her judgment about the scope of the 2014 audit to her father. I welcome the input of my colleagues on the Board of Accountancy.
Up scenario number 3. With these scenarios, we hope we appropriately exaggerated things to bring out some of the threats that you might see in a given situation. These really focused on independence issues because the threats and safeguards approach today is part of the AICPA independence standards. I think if you look at scenario 2 and 3, particularly the audit fee issue, the self-interest threat, in scenario 3, the familiarity threat, those are probably very real situations that would be covered by the threats and safeguards approach that really aren't covered by a particular rule, but still are covered under the AICPA conceptual framework for independence. The other thing I'd want to point out is there was a viewpoint here on the part of Mr. Browning. Well, the rules are the rules. Now, what happens when a rule is not on point? Today, for independence, you have a conceptual framework that you should turn to. 2 years down the road, if you refer to the AICPA codification and the conceptual framework for members in public practice and for members in business, it's not just the rules are the rules. Beyond that, if there's not a rule on point, the threats and safeguards approach must be implemented. I think there's an interesting question that Noel brought up. How does your rules relate to the AICPA rules? I'm willing to bet there's a number of states out here that you have your own ethics rules without reference to the AICPA rules. What that means is you don't incorporate the threats and safeguards approach. And I'd be asking each of you to go back to your boards and be asking the question, as the AICPA codification is released next year, and you look at it, and you look at a broader threats and safeguards approach, how are you going to incorporate that broader threats and safeguards approach into your board rules? Because that's where it really matters. On one hand, I understand I'm standing up here, we're preaching to the choir, but I think there is some real work that needs to be done going forward as we look at the AICPA threats and safeguards approach and how we're going to implement that across the board and how you bring that into your state board rules. Now, with that said, join me in thanking our cast. And thank you very much.